Not Mr. So my legal name is Sir William Haggins IV. So call me Sir Will, not Mr. Will, but Sir Will. I'm from a program called DOPE, doing our part through educating, empowering, and entertaining. We work with teenagers, teach them different subjects like entrepreneurship, financial readiness, all the above. All right, now let's talk about checking accounts. Who here has a checking account? Who knows what a standard checking account is? Just a regular checking account, like the ones you have. So if I was a business checking account, what's the business checking account? So again, for DOPE, let's say, I can't get a check for DOPE and deposit it into my personal account. So the account that's my personal account, Sir William Haggins IV, I can't take that check for DOPE and put it in there. I gotta have a check account for the business. So the next one would be student checking account. What is that, right? For y'all. Student checking account would be, typically they don't have any fees, stuff like that. And the last one would be an interest-bearing account. What is that? An interest-bearing account, meaning the bank is paying you interest, paying you money for your money to be in the account. Now we talk about savings accounts. So the savings accounts you will get now would be a basic savings account. It'll have a very low interest rate, like 0.05% or 1% if you're lucky. That's how much you would save. Not a lot of money because you don't have a lot of money invested in it. So it's a little bit of money. And also a big thing, you ever heard of 50, 30, 20 rule? So the 50% is for your needs. Needs are what? Your rent, utilities, gas, car note. Those are needs. So it means if you make $2,000 a month and your rent is $1,200, you are over leveraged. You can't afford that apartment. So all your bills should be under $1,000 if you make $2,000 a month, right? So that means you're getting a roommate, living at home with your mama, whatever you need to do. But that's what the $2,000. So the 30% is the wants. What are wants? Shoes, haircuts, nails, jewelry, iPhone. Those are wants. And then the 20% is what? Savings. So when you get your check, you should immediately be transferring the 20% to your savings account. Most jobs allow you to add multiple different things for automatic direct deposit. So you should automatically, in your checks, put 20% to savings. That's the money that's gonna help you to be able to grow and become stable, financially stable when you get older. All right, so also, y'all know what a credit card is? Okay, you know what a debit card is. What's the difference? Somebody tell me. So if you buying things online, what happens when you buy stuff online? People can steal your information. So if, let's say you only got $1,000 in your checking account, right? And someone steals that $1,000, but you got rent coming up. Then you cook, you can't do nothing. But if it's your credit card, that's not your money. So the credit card, somebody stole $1,000 of your credit card, you just call the credit card company and say, somebody stole whatever out the account, they're gonna say, cool, we credit it back, you good. So if you are buying things online or gas stations, stuff that typically people steal your information, the credit card, the gas station pumps, always use a credit card. Now a credit card comes at you have to be disciplined to use a credit card. You gotta pay it on time. I use credit cards for everything. Y'all know how to write a check? Right, that's why we try this thing. So everyone should know how to, or at least seen a check. And with a checking account, you should always write with a pen, not a pencil. Why do you think you don't use a pencil to write a check? They could erase it and change it. Moving on. Credit card slips. You ever been to a restaurant before? When you give them the bill, they give you a credit card slip to fill out. At the top of the credit card slip, there's a date on there. So we're gonna do what? Put the date. Typically that would print on the machine, but for this purpose, we're gonna write it out. Also on the credit card slip, it has the time, the credit card type. So if it's like a MC stands for MasterCard. If it's Amex, it'll say American Express, it'll say Amex. If it's a Visa, it'll say Visa. The account number is your credit card number. They typically will X out the digits and keep the last 4. Transaction key, authorization code, expiration date of your credit card, check number, take note, and table. Next thing to talk about, credit score. Super important. Why is it important? If you have a bad credit score, you will pay a lot more money for stuff in your life. You will pay hundreds of thousands of dollars of stuff more in your life, more interest. So credit score is made out of these amounts. 35% is payment history, meaning how well do you pay your stuff on time? So if you have a credit card for 2 years and every month for 24 months you paid on time, that's good. Now if you did 2 months, you bad, paid good, paid bad, late, next one, it's gonna mess up that percentage. And then amount owed, right? Let's say you have a credit card for $10,000. If you owe $9,900 in that credit card, that's bad. You should be under a 30% utilization. So if you have a credit card that's worth $10,000, you should only be using up to $3,000 of it. So again, you wanna make sure that that's how much, 30% for that. And then length of credit, right? If you have a credit card for 10 years, that's good. When you guys are new, 18, they're gonna have it for that long. New credit, meaning you open up some new accounts. You already got a credit card on file, you open up a car loan, new credit. And then credit mix, the diversification of your credit. If you have only credit cards on there, it's not good. But if you have a credit card, if you have a mortgage, if you have a car loan, those are the mixed diversity of credit. Loans are money that is borrowed with strings attached. They aren't free. So every time you get a loan, it's based off that credit score and how much money, how much interest you're paying. Again, if I borrowed $10,000, but I have a great credit score, let's say they only charge me 10% interest, $1,000, which means at the end of the loan, I'll pay back $11,000. But let's say I charge you 25% interest. At the end of the loan, you'll be paying me $12,500. All that literally just based off that credit score number. But make sure when you're young, keep that score high. Make sure you pay your payments on time. Even if you lose your job or whatever, call the credit card company and say, hey, this is what's happening, because they'll give you, breaks. Don't avoid the collection calls. Call them, tell them what's going on before you have to get a bad credit score. We're gonna talk about investing. You ever heard the expression, high risk, high reward? Heard it before? Meaning if you put your money in more riskier situations, the yield of return, the amount of money you get is higher. Invest in yourself. If you wanna put the money into starting your hair business, starting your lash business, your shirt business, whatever the case may be, it can pay off for you in the long end. So if I bought a house this year for $200,000 and I paid this amount of money, $14,400 for the year in rent or the mortgage payment. So my house then gained $6,000 this year in equity, right? So yeah, I paid $14,000, but I gained $6,000 in equity. If you were renting the house, you gained nothing. And lastly, life insurance. We done with the fish fries. We're not doing GoFundMe because Ray Ray died. So we're gonna make sure we put life insurance policy. The quickest way to gain wealth in any community is life insurance. Cool, so y'all get that? So make sure you get life insurance policies. The quickest way to gain wealth in your community and yourselves for that.